MTN Ghana has been one of the most talked about stocks on the GSE, but is now the time to load up or lock in profits. In this video, I'll break down MTN Ghana's performance, the latest news driving the price, and my verdict on whether it's a buy, hold, or sell right now. Let's start with the performance recap. Over the past 12 months, MTN Ghana has shown remarkable resilience in a challenging market environment. The stock currently trades at 3 CEDIS and 88 pesewas, representing solid growth from its lows earlier this year. What's particularly impressive is the consistency of this performance. While many GSE stocks have experienced wild swings, MTN Ghana has maintained a steady upward trajectory that institutional investors love to see. The dividend story here is equally compelling. MTN Ghana just paid out 24 pesewas per share in April 2025, which represents a strong commitment to returning cash to shareholders. This dividend payment shows management's confidence in the company, its cash generation ability, and provides investors with tangible returns while they wait for capital appreciation. Now, let's talk about what's been driving this stock recently. MTN Ghana reported 34% revenue growth in their latest financials, which is absolutely outstanding in the current economic climate. This growth is being driven by 3 key factors. First, their mobile money platform MoMo is experiencing explosive adoption as more Ghanaians embrace digital payments. Second, data consumption continues to surge as internet penetration deepens across the country. And third, their enterprise solutions are gaining traction with businesses looking to digitize their operations. The regulatory environment has also been favorable. The National Communications Authority has been supportive of telecom infrastructure development, and the upcoming 5G rollout positions MTN Ghana as the clear beneficiary of Ghana's digital transformation. From a technical perspective, MTN Ghana's chart looks solid. The stock has established strong support around 3 CEDIS and 20 pesewas, and has been making higher highs and higher lows over the past 6 months. Volume has been consistently healthy, indicating genuine investor interest rather than speculative trading. But here's where it gets interesting from a fundamental standpoint. MTN Ghana currently trades at what analysts are calling a significant premium to fair value. However, this premium might be justified when you consider their market dominance. With nearly 70% market share in Ghana's telecommunications industry, MTN Ghana enjoys what Warren Buffett would call an economic moat. Their infrastructure advantage, brand recognition, and customer loyalty create significant barriers to entry for competitors. When we compare MTN Ghana to its regional peers, the valuation looks reasonable. Telecom companies across West Africa with similar market positions are trading at comparable multiples, and many are delivering lower growth rates than MTN Ghana's impressive 34% revenue expansion. The company's balance sheet is another strong point. MTN Ghana maintains healthy cash flows, manageable debt levels, and continues to invest in network infrastructure without straining their finances. This financial stability is crucial in Ghana's current economic environment, where access to capital can be challenging. However, there are some risks to consider. Currency devaluation remains a concern for any Ghana-based company, and MTN Ghana is not immune to this. Additionally, increased competition from new market entrants and potential regulatory changes could impact future profitability. The company also faces the ongoing challenge of balancing network investment with shareholder returns. So, here's my verdict. For long-term investors seeking steady growth with regular dividend income, MTN Ghana represents a strong hold position. The company's market leadership, consistent cash generation, and exposure to Ghana's digital transformation story make it a compelling long-term investment. For new investors considering entry, I'd rate this a cautious buy, but with a strategic approach. Rather than buying a large position all at once, consider dollar cost averaging into the stock over the next 3 to 6 months. This allows you to build a position while managing volatility risk. For short-term traders, this might be more of a hold situation. The stock has run up considerably, and in the near term, some consolidation around current levels wouldn't be surprising. If you're looking for quick gains, there might be better opportunities elsewhere on the GSE. My personal take is that MTN Ghana deserves a place in any serious Ghana-focused portfolio. The combination of market dominance, steady dividends, and exposure to the country's digital growth story makes it a foundational holding. However, position sizing is key. I wouldn't recommend having more than 15 to 20% of your GSE allocation in any single stock, regardless of how strong the fundamentals appear. Looking ahead, watch for their quarterly subscriber growth numbers and MoMo transaction volumes. These metrics will give us early insight into whether the growth momentum can be sustained. Also, keep an eye on their capital expenditure guidance, as this will indicate how aggressively they plan to invest in 5G infrastructure. The bottom line is this: MTN Ghana isn't a get-rich-quick stock, but it's a get-rich-steadily stock. In a market where consistency is rare, that steady performance combined with regular dividends makes it worth considering for most investment portfolios. Comment below and let me know, are you buying or selling MTN Ghana? Don't forget to hit that subscribe button for more GSE analysis, and I'll see you in the next video where we'll be diving deep into the banking sector's performance. Keep investing smart.